Is buy-to-let dead? Is property investment over? I've never seen it this bad. Is the government trying to kill us? These are some of the headlines that we would have been seeing since 2022. And I've had a lot of similar questions and conversations with our investors since. But is it actually true? Is it still viable to invest in property? Well, we're going to be covering that exact topic today and answering the question, is buy-to-let dead? With interest rates being so high, in certain parts of the country, investors are actually going to be losing money. Where those purchase prices are high and those yields are low, there's actually going to be negative cash flow on those deals where you take management and voids and maintenance into consideration. And this is only going to be exacerbated by the fact that a lot of these investors will be on fixed term mortgages, which will be coming to an end like naturally over the next 12 to 18 months. And they're going to see a huge jump in their interest rates on those mortgage products. And this is likely to mean that a lot of those investors just feel enough is enough and they want to exit the market. To illustrate the point, let's look at a typical deal in London. So the property is purchased for £450,000 and it has a rent of 1,800, which has a yield, a gross yield of 4.8%. Then factoring in the usual 5% for voids and 5% for maintenance and the management fee of 12% plus VAT. And with an interest rate of 5.5%, and all of these are your costs, this property actually ended up losing money. So minus £555 cash flow per month, which is a big loss. And if you were an investor, you would think that buy-to-let is completely destroyed and you would want to sell this property. Further evidence that the end is nigh is the fact that since former Chancellor George Osborne turned newspaper editor turned banker changed the tax rules so landlords couldn't claim back mortgage interest and mortgage expenses as part of their taxable expenses for investing, the games has really changed. And this has affected so many landlords who invested in their personal names in the 1990s and the 2000s. And in fact, this has led many to kind of question the viability of investing through their personal names and even investing at all, because the banning of Section 24 has affected them so much and has actually led to the huge spike in investment through limited company that we've seen over the last 10 years. And in fact, we've seen a 491% increase in limited company setup since 2011. And the final nail in the coffin for many is the newly proposed Renters Reform Bill, which is due to come into legislation in 2024. This bill is a major shake-up of the private rental sector and its legislation, and essentially bans no-fault evictions. And what this means is that it is far harder for a landlord to evict a tenant, even in those circumstances where they might be, quite a difficult person to deal with, might not be paying rent. And there is only a few reasons why you can evict a tenant around breach of contract, but even then you'll have to go through a number of hoops and go to court and things like that. And if the property wants to be sold by the landlord, they're essentially the only two reasons how and why you can evict a tenant, which means there is far less flexibility for landlords. Quite a lot of landlords like the flexibility of, if they get a difficult tenant, being able to just evict them and to change their minds if they're looking to do something else with the property. But that's all going to end now. And that means that tenancies will become multi-year contracts. It means that landlords will have to be very, very careful about the type of tenant they get into the property and do so much more due diligence and checks on those tenancies before they begin and contracts are signed. And all of this means just a little bit more pain and less flexibility for landlords will essentially mean that tenancies become more like marriages, which is a horrifying prospect to many. And this all makes for the compelling argument that in fact buy-to-let investment is dead because it is no longer financially viable or in fact easy or vanilla to actually get involved with. But what are we in fact missing here? Let's look at some of the counter arguments. Firstly, I think this is actually a matter of opinion, and where a person invests is actually going to skew this argument. So if we look at interest rates, those investors in the south are going to be the ones that are hardest by those changes, and therefore they are going to be the ones that are sort of shouting loudest that essentially buy-to-let is over and it doesn't work anymore. But if we look at an example of a deal in in the north, where figures and yields are very different, then it actually creates a completely different picture. So let's take a look at a deal in the northeast where I invest. So we were looking at a purchase price of 80,000, monthly rent of 650, which gives you a really good yield of 9.75%. Then looking at all the same costs as we factored in earlier, so 5% for voids, 5% for maintenance, and for management as well of 12.5% plus VAT, and an interest of 5.5%, of course, is all of your monthly costs. This property actually cash flows and makes a profit on a monthly basis of £217. So of course, you're certainly not going to be able to buy an island with this or be able to leave your job just after one property, but it will be passive income and provide a really good return on your money given the strong yield. So it can be argued that buy-to-let investing is still very much alive, and you just have to be strategic and more careful where you invest in this new environment. Guys, can I ask a favor? Can you please subscribe to this YouTube channel? It would really help us grow and get more content out to like-minded people such as yourself. So thanks very much in advance for your support. Yes, interest rates are high, but the mortgage market is actually stabilizing, and you can get better rates week on week now because it's becoming more competitive. And in fact, you can get a mortgage rate of around 5.5% for a buy-to-let. But one key point here is that we've had, over the last decade, an unprecedented period of lending, which has been essentially too cheap. We've been spoiled. It is not normal to have lending and interest rates below 1%. If you look at the data over the last 50 years, interest rates have never been so low. And in fact, we've had it much higher. And before 2008, for example, they were around 5.5. And the highest we've had is 15% in 1981. So the base rate that we've got at the moment is kind of about right. It's about average. And that's just one thing to think about. We've just been very spoiled, and the lending environment is kind of normalizing now. The other good news in terms of the lending environment is that inflation is starting to come down, and the government expects it to come down to 5% by December 2023. And this means that mortgage lenders are becoming more optimistic, and there is a prediction that the interest rate set by the Bank of England will peak at 5.7% in 2024 in spring, and then it will actually reduce to 4% over the sort of preceding 18 to 24 months. And this means that the lending environment, after such a tumultuous kind of 6 to 8 months since Liz Truss's disastrous budget in September last year, the mortgage market is stabilizing, and the mortgage market is becoming more competitive, and we do feel that there's light at the end of the tunnel. So the next counterpoint is the fact that rents are booming. Rents are at an all-time high, and supply cannot keep up with demand. And what this means is that we're in a hugely inflated rental market, which is actually the best time to, as an investor, to get involved. And this will only continue because those first-time buyers that are staying put, that will continually happen because they can't afford the deposits, they can't afford the interest rates. So they are going to continually look to stay in their rental accommodation, which means that the demand will continue and will continue to grow, which will then put a pressure on the rest of the rental market, which means that the prices will continually grow. And that's not necessarily sustainable, and it doesn't seem to be a response from the government for our housing crisis, but that is what is going to happen. That is the consequence of some of that inaction from the government. So in fact, this is the time to invest in property. We're going for a rental boom. It's obviously good news for landlords, but bad news for first-time buyers on this front. Most importantly is the view that property is a long game. Property is not a get-rich-quick scheme. You cannot leave your job overnight through becoming a property millionaire by the time you're 18 and all that other bullshit you see on the rest of the internet. It is not like that. Property is actually quite boring. It's a bit like watching paint dry. You need to have the patience to stick with it for the long term and see through to the compounding growth that you will get over 20, 25, 30 plus years. That's where the real wealth is created, through that compounding growth. Go and look at a compounding graph and you will see that the biggest margins and the biggest earnings and wins actually happen in the last sort of 15% of that quartile. It's a cliched analogy, but imagine planting a tree, an apple tree, and then after 1 year, wondering why you haven't got a massively fruitful orchard that is enabling you to produce an apple cider business, and you get bored and you think, well, I've been doing this 1 year, that's long enough, I'm going to go and farm somewhere else and farm a different crop. No, you wouldn't do that. You need to have the patience to stick with that apple tree for the long term to give you the real fruits and to actually help you to build that cider business. And maybe that's not a great analogy, but you get my point. It's the long-term game, and you've got to have the patience to see that through. Property, like any investment, requires patience. There will be challenges along the way. There will be ups and downs, market fluctuations, interest rate rises, legislation changes. But you need to remember that real wealth in property is created over the long term. Property generally doubles every 10 years. So if you hold on to it long enough, you'll get that life-changing wealth creation through that capital appreciation and growth. And that is the real reason why 90% of millionaires in the world invest in property. It's for those gains. And it is with that viewpoint that you need to be looking at all your investments, including buy-to-let. The fact that we're going through a period of high interest rates could be seen as short-term pain, because the long-term gain from property happens over that 40-year, 30-year period. So these marginal changes in net profit and cash flow that happen in a very short span, which is essentially a 1 to 5 year period, which we're dealing with now, essentially will be evened out over that long-term window. And it is that you need to have in your mind, that property is a long-term game, and actually having a mindset that you're thinking about the short term and thinking about the market fluctuations and changes and interest rates in the short term is actually the wrong mindset to have. You need to think about it through a 30-year lens, because that's where the real wins and the real wealth is created. And looking at the legislation changes, which are one of the strong reasons why people say that buy-to-let investing is dead, I think you've got to have the viewpoint that if there's one thing in life that's certain alongside death and taxes, it's change. We changed, society's changed, the world changes, markets change, property changes, and we need to essentially adapt or die. And you can make strong returns still from property, and that is what a lot of our clients are doing, and that is why there's been a huge growth in the limited company formation, because that is the way to do it now. That is the way to tackle the banning of Section 24 and those tax changes that I mentioned earlier. And through that way of investing, you can make strong cash flow, and you can still get the long-term gains and the real wealth from property. The Renters Reform Bill is going to be a big change. It is a significant shake-up, but that doesn't mean that it's all over. Yes, there will be some landlords that will throw in the towel, but actually that presents opportunities for those savvy investors to pick up some deals from those tired and retiring landlords. And what generally happens where you've got increased barriers to entry, which is what the Renters Reform Bill is going to bring, because there's likely to be a national database of landlords, is that standards are going to increase. And what generally happens when standards increase is that the reputation of the whole industry gets better, prices go up, and essentially demand goes up because of those standards have increased, and that is what is likely to happen to the rental market. We are going through a massive period of professionalization of the landlord market, and there are some people out there that never wanted that. There's lots of people that took shortcuts in providing poor quality accommodation. There's still 25% of rental property in this country which is not fit for purpose, as per a government report of 2 years ago. And it's not a bad thing that we're raising the standards and actually sidelining and getting rid of that 25% of landlords who think that that is acceptable. And it's also worth noting that it's likely that the Renters Reform Bill will be very much watered down as it goes through Parliament, because there is a lot of MPs that are not happy about it, and there's a lot of criticism of the bill. And generally what happens is you get a proposal of a piece of legislation, and then it goes through Parliament, and there is some compromises and some changes. So we don't know what it's going to look like yet, and so really there isn't a reason to completely panic yet. And so is buy-to-let investing dead, or is it actually just changing? We're in the middle of a housing crisis, we're in the middle of a rental boom, And these are actually things that you can benefit from. If you are careful and strategic about where you invest, you can take advantage of these elements. So if I was investing now, I would be looking at high yielding areas where you can benefit from the good returns that those high yields will offer, that they will provide positive cash flow. And I would be looking at investing in high capital growth areas as well. So you're looking at the short-term gains of the cash flow, and you're looking at the future with the capital growth as well. And that will mean you can ride the storm in terms of these interest rates that we're facing at the moment. It is important to take a long-term view, as I mentioned. Think about everything investing-wise through a 30-year window. And this will mean that you look at legislation changes, you look at market fluctuations, you look at interest rate rises and falls very differently, because the real gains and the real wins in property happen over the long term, and that is where the real wealth is created, not in these short-term fluctuations and not with a short-term mindset. You need to stay patient and you need to stay strong in order to get the best out of property with that long-term view. Property isn't a get-rich-quick scheme. It is very much a get-rich-slow scheme, and you need to have the patience to ride that out. I'm not saying that property is easy, but nothing that gives you the kind of rewards that property offers rarely is. So in summary, I don't think buy-to-let is dead. I think it's very much alive and kicking. It's just changing and we need to adapt, but you need to have the long-term mindset and invest strategically. So if anyone tells you that it was better in the good old days, remind them that they had to rewind their videos in order to watch that film again, and they also had to queue to make a phone call. Can you do me a favor? If you've enjoyed this video today, please can you subscribe to our YouTube channel? We're very new and it would really help us grow and to be able to get more content out to like-minded investors like yourself. I really appreciate the support, so thanks very much.